Welcome to the new school. What we wanted to do was talk about the concept of authenticity and vulnerability in an industry that has typically been super buttoned up, super professional, and a little bit old school. Hello, and welcome to episode number 20 of the New School Video Podcast. My name is Candace Carlton, and I'm the head of advisor education at FICOM Partners. In this episode, we have our first Canadian guest based out of Vancouver, Canada. We have Mark Bakker, who's the VP of Marketing, and Mike Walkinshaw, the CEO of TIMIA Capital. So TIMIA Capital is an alternative to venture financing for SaaS company founders. So I thought what was really interesting about this episode is they really shared in depth about how they tried to find a better way to get founders funding, essentially to grow their business without giving a whole bunch of equity, how they've grown year over year, and how they've done that with a very lean team in terms of applying an experimentation mindset and giving everyone the autonomy to create efficiencies through marketing experiments. I think that was phenomenal. They also have a really interesting insight in terms of how they solved for remote work across generations within the firms. And they talk also a lot about how private credit has now become more liquid. So there's more talk around it, more access for advisors to invest in and to look at it for their clients. I think you're really going to dig this episode. They really represent everything New School. So this is a really exciting New School episode for us for a number of reasons. I think the first one is the first time we've had Canadians on the show. So welcome, Mark and Mike. It's really exciting to be here. Thank you for representing.
Happy to.
We'll do our best.
Yeah, we'll do our best. We'll be polite.
The second reason it's really good is actually Mark is a personal friend of mine. Him and I are both Alt MBA alumni, and I know that there's a lot of them out there. So hello, part of the Seth Godin tribe, which is really exciting. And then the third reason is TIMIA Capital. You guys are doing such interesting new stuff in the space, and I've been privy to a behind the scenes version of it because Mark and I meet as part of the Alt MBA alumni group, and he always is telling me about the stuff that you're doing. But Mike, I'd love for you to tell us about TIMIA Capital and why it's different. Because from what I understand, you've identified a really underserved asset class, and you've been able to create funding for entrepreneurs, primarily SaaS founders, SaaS company founders, in a way that wasn't previously available.
Yeah, thank you, Candace. TIMIA Capital started about 6 years ago, and its genesis was we just thought that recurring revenue software companies were a heck of a lot less risky than people were giving them credit for. And so those companies were out in the market raising equity dollars from angel investors and venture capital people and giving up large percentages of their company for that capital, even though those companies are really, really stable, reliable companies. They have annual contracts. I mean, we all use their products. They bill on our credit cards every single month. And really, those companies, when you look at them in the bell curve of risk across companies, those companies are really not risky at all. So they ought to be able to access debt to grow their company at an earlier stage than they generally had been able to. But the normal banking system would look at a software company and say, well, how many assets do you have that I can collect if you go bankrupt? And they say, we don't really have anything. We don't even have any servers anymore because we use Amazon Web Services. And so really there's just a couple of computers on our desks. And so banks won't give them loans. So they're forced to go back and get equity. Well, we came along and said, well, you know what? We think we can lend money to those companies and help them grow their businesses at rates that are both reasonable for them and less than they're currently paying their venture capital players. but rates at which investors are perfectly happy to receive those kinds of returns. And in our market, that's sort of 15 to 20% annualized interest rates. And so we started accessing that market and really providing that yield on the way through to our investor group. But what we quickly noticed early on was that technology was an important aspect of our business. It wasn't the end game, but it was a tool that was incredibly important for us to be able to do these loans cost effectively across North America and to find the best candidates as easily and as efficiently as possible. So we very early on brought technology in the right amount, we didn't overly build out our platform. We tried to build it at the right scale, at the right time, to provide the kinds of efficiencies that we need while not eliminating humans from the decision-making process.
I mean, it just sounds like the digital advisor of today. I think, when we were having our prep conversations, what I was so struck by was the parallels between what you'd been talking about of automation, systems, process, technology being really important, but it being complementary to the people component. And what I loved about what you just said, and I'd love for you to talk more about it. And Mark, I know there's a whole system that's been built that you guys have built on how you rate potential borrowers and what that looks like. But what I love about what you said, and it's something we practice and it's something we coach all of our advisors on, is you didn't have this idea, spend a ton of money upfront and then build it soup to nuts and then try and market it. But you really took an approach of building a little, testing, growing, getting revenue from it, learning, and then continuing to evolve it. Can you tell us a little bit about that?
Yeah, I think it's important to differentiate. There's a lot of companies now, organizations, platforms in our space, and some of them it would appear that the platform itself is the goal, and we just don't think that makes any sense. What we believe is that return, yield, IRR to end investors is the goal. That's the only thing that matters. How you get there is really up to you to try and figure out how best to do that. And we find that technology is a tool, but it's not the only tool we use. And so in the early days, when we were small and we didn't have a lot of resources, we very early on started saying, well, what are the things that routinely happen in the sourcing, the originating, and the underwriting, and then the management of this loan basket? What are the things that are routine that are going on month to month that are not, they provide binary answers, they're yes, no answers. What are those things? And can we automate those things? And so we very quickly dug into all the tools that are out in the marketplace and built a few internal tools. And we automated the stuff that was just really easy and didn't require any human cognitive activity to try and figure out if there was subtleties to it. And we eliminated those and pushed those all off the table and got all those automated. But we left the stuff that was really human cognitive based and where the human mind still provides an advantage over the analysis of an investment. And really, in the early days, there was only so many things we could do. So we just took the very, very top of the funnel and knocked those things off the table and got them dealt with. And then as we scaled, we invested in another batch of tools to do the next batch of things. And then now we are, 6 years on, we've automated, say, 60% of the evaluation processes that we use. And we believe that fundamentally has two advantages. One, it finds better companies for us to invest in. And two, it's a cheaper way for us to operate, which allows us to do smaller loans that others can't do and gets better yield for our investors. So there's really two things to it. And then that last 40%, some of those will still be automated, but there will always be stuff in there that is going to be left to the human brain to figure out. And, one classic example would be if we're on the fully automated side, what was your revenue growth year over year? That's a percentage calculation. What was your gross margin? Numbers and calculations and very simple stuff can all be automated, but the quality of the management team is something that we're probably always going to evaluate as humans, and that's going to be left to the group team. The overall evaluation based on a credit score, which is developed by the system, but then the other qualitative factors that we look at in a deal, put that together and then make an investment committee decision. Those are still human things that will probably always be there.
Yeah, Mike, just on that, in addition to finding those identifiers early on, it was also identifying what is the least amount of information we need at the front. So rather than being intensive right away and asking entrepreneurs to provide an entire data room for us, it was also identifying what are our critical points that we need to say yes or no right away, so we're not wasting anyone's time.
Yeah, and entrepreneurs really appreciate that, actually. That's one of the big parts of our system that works well is we're going to take 15 minutes of your time and we're going to give you an answer as to whether you're going to move through to the next phase or not. And that resonates well with entrepreneurs because they're busy, and
and it was evolutionary as well. Like it wasn't obvious on day one. It took us a while to identify those spots, and that changes per company, per type of company we look at. Like specifically SaaS, true SaaS is it might seem easy and transparent from the surface if you don't know SaaS, but as you dig in, you can identify those things. And then not all companies are pure SaaS. So they might say they are, but they're not. And so we've identified what we call edge cases of companies that have a component of SaaS and other types of components, whether it be hardware or human services, or maybe it's more human intensive for onboarding a certain type of company to use their software.
I love how we're talking about the fact that really TIMIA was built on identifying an opportunity in the market, right? And then really giving these SaaS founders the ability to grow their firms without giving away a bunch of equity. I love how we're talking about this automation and technology, but then also having the human component in it, right? In the foundation of how you run your company. Mark, what I really have appreciated in all our conversations is your approach to marketing experiments, of iterating, learning. And I know, Mike, from our conversations that it's very much part of TIMIA Capital culture. But Mark, can you give us that context? When we say marketing experiment or an experiment in this, right, what are we actually talking about from your point of view? And what is the mindset that you go in with when you're looking at something?
Sure. So a lot of marketing these days, especially digital marketing and people who look into it as a way to grow their business will think, okay, well, there's a lot of different ways we can do this. What is something that's going to tell us? And so we have this term called growth hackers or growth marketers. And they lean on data significantly. And that is a good thing to give you leading indicators. And so it's good to identify early on what sort of channels or what sort of campaigns will meet the market you're trying to serve. However, just like Mike explained earlier, we're taking a qualitative and quantitative approach. So it's one thing to look at Google Analytics and see what's doing right. It's another thing for an entrepreneur to tell you what resonated. And so our approach has been that. We've tried a lot of different tactics and seen things that have worked, but we're always listening. So I try, even though I'm in the marketing space, I'm trying to be on calls with our sales guys, with our head of origination, to listen in to what the entrepreneurs' feelings and thoughts and things that drive them to a purchase decision. And that might change during the origination process. So when an entrepreneur first comes to us, they might off the top of their head just think, how much capital can I get? But once you're in due diligence that might change because suddenly they're thinking about pitching to their board, they're talking to their CFO, or maybe they're not big enough for a CFO, so they're talking to their contract CFO, their hired out firm. And so listening to that conversation progress from that first 15-minute phone call, then to getting legals in front of them, we build our messaging so that we can align with the entrepreneur, with our content, and with our strategy for their first intention. They're like, oh, how much capital can I get? Or something similar to that. But then also what resonates with them when they actually sign with us, when they start working with us on a monthly basis and they're using our capital, they're deploying our capital.
Because you're telling a story of a new company, right? A new offering. So how to tell that story in a marketplace where you potentially don't have anything to copy.
Yeah. So in the traditional sense, and in a lot of ways, there's two things that we're kind of fighting against. One is that VC or equity, for some reason, is significantly romanticized. So when you land a big VC round, you get the TechCrunch article. And there's this buzz. But the day after the TechCrunch article, you go have to run your business and you've just given away 20% of your company. And then on the other side of it, it's kind of the consumer mentality of, oh, debt is bad. But there's always a return, right? That either the credit card is getting a return, the alternative lender is getting a return, angel investors are getting a return, the VCs are getting a return. Well, what about the founder, right? Where's that? Where's the founder's return? And so it is a little bit tricky to find the right messaging that doesn't say, debt is bad, doesn't say, never talk to equity providers. There's the right place and time for each type of capital. And we are trying to align our capital with entrepreneurs who are looking to specifically grow their business, to invest into sales and marketing so they can get a return on our capital, which is greater than what we're expecting in a debt repayment.
So if I could build on that for one second, I think one of the important points to make for the viewers is the concept, though, of this whole marketing platform as one of the innovations. Venture capital. So there's really, go back 20 years, there were really sort of two ways that somebody like this might get money. They would go to a bank, and if they were of sufficient quality, size, scale, they would get it. But banks had branches in every community across the country. And so there's a lot of expense associated with that. And so as a result, the minimum loan they were going to give, in this particular sector might be like a $20 million loan to a $50 million company or something. So there was sort of that, or they would go, as Mark said, to the venture capital market. But the venture capital market's origination strategy was, get to know all the lawyers, bankers, and accountants around in all of the key cities that they might do a deal in. So Boston, New York, LA, San Francisco, Chicago. And then if some entrepreneur happened to talk to the right lawyer, they would get an introduction to the right VC, and then the VC would do the deal. And that's how it would work. And software companies themselves innovated this online marketing, selling to companies across the world using tools like, first of all, Google, and now LinkedIn, and all the other tools that they use to sell, because their product sale is like $100 a month, $75 a month. They can't afford to get on a plane and go visit their customers. So they needed to find a way to market and get people to buy their product online for a very, very low cost. And there's no secret to the fact that we basically have borrowed that marketing strategy. And Mark has taken that marketing strategy and applied it into the lending world in a way that has proven very, very attractive, because it finds great candidates and it does it at a very, very low cost. And those marketing tools, I mean, when you think about it, at the end of the day, we are selling or offering capital to companies, which is not a product that's hard to sell in a lot of cases. It's much harder to sell something, an added tool that a software company might be wanting you to buy to bolt onto your suite of tools and figure out if it's going to add value or not. Everybody knows what the value of capital is to their business. So it's a very compelling offering. And we do run a lot of different A/B testing to try and figure out different messages that resonate. So sometimes it might be, keep more of your company. Sometimes it might be buy out old shareholders. Sometimes it might be, you want to acquire another company, come talk to us. There's a bunch of different sort of subtle messages in there, but it all falls under an umbrella that's a really attractive product.
Mm-hmm. That's true. Yeah.
So let's just step back a little bit, because I know we had shared you've had exponential growth year after year. It's a new offering. You're innovating in the marketplace. Where I'd love to get to eventually is how now this is more accessible for even advisors, right, to offer their clients, because the liquidity is now there in a way that it hadn't historically been. But before we get that, can you talk a little bit more about this people component, your internal culture, and how you've really been able to stay innovative, continue to iterate, and have such exponential growth? What is that? A lot of, when I speak to advisors, I recently did a talk on innovation, and what we typically find is the CEO is usually the person who has a big vision. They want to innovate, they want to expand, and they feel like because financial services has been such a traditionally conservative industry, there are a lot of regulations around it and process, all these things, that they find it challenging to get their team into that headspace. And also because they think of innovation as like inventing the new iPhone. But from what I understand, your whole team really has that mindset and it works in that space. Can you talk about that?
And maybe we can talk about the Gen X millennial relationships too. That's a big part of any company in this space today, right, Mark?
Every day.
Yeah. So we have a relatively small team for the amount of assets under management. And one thing we've done is hire people who not only can evaluate whether an investment is a good deal or not, they also are capable of building system. And so the same person who is evaluating deals is constantly looking at the system that they're working in and saying, what can I automate? What can I automate? What can I automate? So we don't have like a separate IT department that says, oh, let's automate this, let's automate that. The people themselves are the people who are saying, okay, well, you know what? This process is costing me a lot of time on a monthly basis. What can we do? And then we all sit down and we figure out, well, what's the tools that we can use to automate that process, and then put some automation on it. So pushing automation down to the decision for automation, down to the level of the people who are actually doing the work, is absolutely critical. And, practically fundamentally required, given the size of the size of the organization that we're dealing with. The second thing, and this is no different than a lot of companies I'm assuming right now, is remote, flexible, remote everything. So being able to work from home while you're moving, such as Mark is, or being able to collaborate effectively with all the tools we need. And so we spend a lot of money on making sure we have all the collaboration tools we need across the entire border. Even old guys like me I'm a big fan of using all of the various different tools that we have now, having come away from the old Microsoft architectures. So making sure that all works, but the beauty of it is that software tools have evolved to the point where you don't need to be a big company to get access to some really advanced stuff. And we, along with others, are benefiting greatly from that by being able to do that. So I guess to summarize, there's two things. One is push it all down to the people who are actually doing the work and give them both the skill sets and the opportunity to be able to improve that system that they're living every single day. And two, give everybody the broad-based distributed tools so that they can operate from home, they can operate on weekends, they can operate on days, we can operate across the continent, all of those things effectively and collaboratively.
So, Mike, let me just add some practicality to this, because I think the culture and the engagement of people is as important as the tool. So back before COVID, where everyone is forced to work from home, TIMIA looked at our organization and we did identify areas where we could add tools. But even with the right tools, Mike, I apologize in advance, but it took some pushing, it took some coercing to get you to use the tool effectively, and everyone for that matter. So I'll give you a quick example. You can easily get everyone on Zoom, but if you have 3 or 4 people in a boardroom and 3 or 4 people on Zoom, you can easily have a distraction in the room, and the room can kind of take off with the meeting. And so before COVID, when that was possible, we made a decision that when we're having a meeting where there's a few people remote, that means everyone should act as if they were remote. So even if we were in the same office and could go to the same boardroom, we all each went to our own individual computers, because that levels the playing field.
Yeah.
And even though Mike or Andrew didn't want to do this.
Let me add on to that. That idea came from Paul, one of our CEOs of one of our companies, and he ran a remote guy named Paul Laberge. It was a company called iCompass, ended up selling, successful exit. He was the one. He's my generation. We were sitting down at dinner and talking about how he had taken his company from where it was and selling it and making a bunch of money. And he said that was one of his biggest successes. The company was based in a small town in British Columbia called Kamloops, which is not exactly a software hotbed. And so he had people all over the place. And he said that was one of the biggest, most important things he ever did, was put everybody, even if they're in the same office, everybody has to sit in their offices and work on Zoom collaboratively side by side, because for that exact reason. And it's so counterintuitive. You think, wow, like, I'm not going to be able to see the person face to face, even though they're 12 yards away. They're staring at their computer and I'm staring at my computer. But the fact of the matter is, for the greater whole, which is the entire team, those people who aren't in that room get cut out. So that was a very, very fundamental decision. And it was a real mind shift for me and for others in the office. Like, wait a second, I have to sit and stare at my computer. But it's massively important.
I love that story. I actually hadn't heard anyone doing that. And I think it's like such a phenomenal recommendation. Give us another one. What's another example of like implementing systems, giving everyone on the same page, or something like?
Well, okay, I'll tell you one. Mark's going to laugh about this one too. This is the Microsoft Google Sheets debate. So I'm a CPA. And we have all kinds of CFAs on our team. And I, graduated university in 1990, and I built like solid 15 years of high-end Microsoft Excel experience. And problem with Microsoft Excel for most of our company's history was that it lives on your hard drive and nobody can access it. And so all those great shortcuts, and I'm a super whiz and I can fly through Microsoft Excel, and suddenly they're saying, well, you got to use Google Sheets. Ugh. It doesn't work the same way. I don't know all the shortcuts. It blah, blah, blah. It doesn't have this function. It doesn't have that function, which are super obscure level functions. So they was just kicking and screaming. They got me over to Google Sheets. And finally I started using Google Sheets and I wouldn't go back. Collaborate. I mean, the collaboration of it. So having one spreadsheet in a place that everybody can work on, even at the same time, where we're all sort of poking away at it, that's a truly powerful tool. And so I've dumped it and I moved on and I gave up my expert user badge for Microsoft Excel.
Mike, what's going through your head in this? Like CPA, like very analytical. Here you are running like what would be, perceived as a very innovative solution. You've got this, team of old generations, and they're like, do it this way. And you don't want to. And what is kind of that internal coaching or story that you have going on in your head that gets you over the chasm?
Well, I think, look, we should recognize Greg Smith, who was my co-founder of this business of my generation. And he was an individual. Unfortunately, he recently passed away from ALS, and we're very sad to have lost him. But he
Sorry to hear that Mark had, spoken so highly of him.
Yeah, he was a really amazing. He was a really amazing guy, and he was more on the software side and on the technical side. And I was he was sort of the engineer and the software guy, and I was and the sort of financial side individual on the collaborative team. And so he browbeat me into taking on these tools and using them from a very early period. After 2 years, there is no cognitive dissonance around, adopting and using these tools. Having seen what we can do, having seen, frankly, how much easier my life is when everybody else can do everything instead of me doing it. It hasn't been that much of a transition. Those first 2 years were probably pretty rough, and there was a lot of hard conversations over what we should or shouldn't do and how we should adopt. But since then, it's been all systems go in terms of adopting every single tool we can get.
Yeah, it definitely wasn't easy. There was a lot of yelling.
There were a lot of, and not every decision, that we wanted to go necessarily got done. There were a lot of ideas that we had that were bad ideas that we reversed and went backwards on and stuff. But, where we're at now, innovation is the source, and I'm very happy with what we've achieved. And it's just it's like a big stone rolling downhill. It's just gathering speed as far as we're concerned.
Yeah.
So when you're making that decision, let's just say Mark comes up with, this is what we should all be moving to. What does that look like structurally within your company? Can you give us how would you do that? How do you have that discussion?
Well, lots of meetings. So it starts with a high level plan of how much, what size are we now? What size are we going to likely be in 12 months? How many dollars of loans are we planning on originating? What are kinds of our returns are we able to get in the marketplace, and what returns can we offer our investors? And that provides a framework. That's the strategy framework. And then we build down into the operational plans where we say, okay, so if we're going to do that, for example, we want to increase the dollar value of loans we're going to originate over last year by 50 or 75%. Okay, what do we need to do that? And so that's where Mark comes in, and we say, okay, you need to deliver leads that are 50 to 75% more in dollar value than they were last year. How are you going to do that? What tools are you going to use? What platforms? What channels? And then it works all the way down through the system. So for the origination, the term sheet, the underwriting, and then into the portfolio management, what tools are we going to need? And the whole thing starts with, don't tell me we're going to add people just to do that. Like, don't go add 50% more people.
Yeah. Mm-hmm.
Because that's not what we're here for. We're here to create a system that can, do more and more and more with the same using technology. That's what we do. So that is, that's a big part of the game, is trying to figure out what tools to add this year so that we can grow by 50 or 75%.
Without adding headcount.
Yeah. And that all is inspired by, those conversations that we're having, and then deciding, okay, well, what can we test? What can we try? And where have we seen any evidence that those things are working? Right. So we don't just go to a new tool provider and be like, okay, this tool is $20,000. Let's go sign up for that, see if it works. Just like our underwriting platform that we've built, the marketing platform is the same thing. It's, let's do it manually. Let's figure out what works. And then if we figured out what works, let's build something that can save a lot of time, or that we can create scale with it.
So I think, it's really interesting because it goes back to the conversation I had, which is when I was at a recent conference, and the workshop that I was leading on innovation isn't just some cool thing, right? It's really, all it is finding a better, cheaper, faster way to do something and to solve a problem differently. And really, I think that's what TIMIA Capital represents, right? Solving a problem differently. It's definitely what the new school represents. When there isn't a map out there, but you see the need, finding that way, and then leveraging, in your case, technology to really find that space to serve people, to give these founders loans that they hadn't ever had access to before without giving away chunks of their company. And so to wrap it all up, I'd love for you just to talk a little bit more about, I'm hearing a lot more about private capital being more accessible and this being an asset class that is coming into the market. It's getting like a little bit of like, would you say trendiness, or is it popularity? Is it intrigue? Like what is around that?
I think it's two macro trends coming together to create a tsunami wave, perhaps. I don't know if that's the right metaphor, but so we start the business 2015. There are other technology lenders that are out there who are also doing their thing. Really the focus at that point is go find companies that are willing to pay, and we're going to help them create value for their own businesses in a better way than they've been getting it and deliver return. But the end investor in those scenarios were always like angel investors or in small institutions. And so that system built up over a couple of years, and we built and proved and proved and started to deliver some returns and got better at it. And we drove down the cost of doing what we do. And then at the same time, of course, most of the viewers on this will know that, the public market investment advisory business is coming under pressure for fees coming down and, just the proliferation of ETFs and, a whole bunch of sort of pressure on their side where they're looking for new product to be able to offer yield or other kinds of returns to their investors. And so you take those two macro trends, and somewhere in the last 5 or 6 years, those two kind of converged and became one trend where we're finding we are able now to provide, with the kind of regulatory support that's necessary, the ability to go out to advisors and retail investors and offer them the ability to partake in giving a private loan to a private company, and to do that through registered accounts. That is one big basket of innovation that happened on the back end, so that we could now take the yield that we're making and pass it all the way through to an investor broker to a brokerage account. The second trend was that that kind of yield we're able to deliver is well in excess of anything else that's sort of out there in that same risk basket. So now investment advisors are able to partake and participate in these loan pools, and to get good vision, which is one of the critical improvements in the system, is they're able to see the underlying basket of loans, and they're able to know what they're invested in and to know how those loans are performing. And they get that kind of data through the technological innovations that we've created. And they're able to get yields that they can offer to the customers, 8, 9, 10%, that are typically well in excess of sort of what other kind of private options might be out there. And, the investors are happy to be getting the yield. The advisors are happy to be offering them new product. And they're able to get them a portion of their portfolio at a sort of certain risk level that really works out on a diversified basis across that portfolio return. So those two trends of the improvement in what we're able to do and offer, and the transparency and the return, with the market at the same time, the advisor market looking for new product to try and battle what's going on inside the space. Those two things coming together, I think, are very powerful forces.
Mark and Mike, thank you for coming on to the New School. We always close out all our guests and we ask, what does the New School mean to each of you?
Mark, you go first.
Yeah, sure. So the New School means that we're not just accepting what the status quo is, right? And what I find fascinating from my history is I was in the startup space. I was in the SaaS, B2B SaaS business for the last 12, 14 years. And coming into the lending space, I thought it was very simple, straightforward, and easy because it's kind of the same. It's been the same thing, but I didn't know enough about it. And so now that I'm working with TIMIA and the people and the team that we've grown, we're all looking at this business and going, how do we act like the entrepreneurs we're serving? The entrepreneurs that we're serving are constantly going out and trying to find new ways to build their business. And we're trying to provide them capital in a way that is accessible, efficient, and not old school. So we're trying to provide that product to them in a way that serves them best.
Yeah. So I used to be a venture capital guy. I was venture capital for 10 years for a $300 million venture capital fund, and I still have all kinds of friends and business colleagues in that business. And I look at how they're doing this business, and they're doing this business the same way they were doing it in 1991. The new school to me is looking at the difference between how us and companies like us are doing, making investments, originating, finding, managing, and comparing it to how the people who resist change, who are afraid of new tools, who are just sort of stay in the course until they retire. That to me is the difference between old and new school, and the quality of my life, the quality of my customers' lives, the quality of my investors' lives is made measurably better by the fact that we are constantly trying to innovate on every single front. And that to me is what the new school is about.
Thank you both for coming on. Where can people find you?
So our website, www.TIMIACapital.com is a great place. LinkedIn, please follow us on LinkedIn. We put a lot of content up on LinkedIn. We have all kinds of sometimes controversial blog posts about how things are done, and we're happy to engage on that front. Those are two great places. Mark, anywhere else?
Yeah, as you said, LinkedIn is going to be the best spot. You can search for TIMIA Capital, or you can search for either of us. So we come up right away. So
yeah, we'll have your LinkedIn bios in our show notes, so you can click into that. Again, Mark and Mike, thank you for coming on to the New School. Such a pleasure.
Thanks, Candace. That was great.
Thank you very much.